Before we start, I want you to pause for a moment. If you're working right now, stop what you're doing. If you're scrolling, put the phone down, sit back, relax, and listen to me very carefully, because what I'm about to explain could change how you see gold and silver for the rest of this year. Something unusual is happening in the precious metals market, and it's not just noise or hype. We are witnessing violent moves, historic rebounds, and sudden shifts in money flow that don't happen often. When they do happen, they usually come with consequences. Just days ago, fear completely dominated the market. Gold and silver crashed hard, wiping out leverage, forcing liquidations, and shaking even experienced investors. Many people thought the move was over and walked away, and that moment of maximum fear is exactly when the market turned. Gold has just delivered one of its strongest rebounds since 2008. Silver, after collapsing nearly in half from its recent highs, has already surged back aggressively. These kinds of rebounds don't usually happen at the end of a story. They often mark the beginning of a new phase. This is not a normal recovery and not a calm bounce. What we're seeing is panic turning into positioning as big money quietly makes decisions. Weak hands are being pushed out while stronger players step in. That's why I'm asking you to stay with me and listen carefully. This is not a prediction video and not about hype targets. It's about understanding why money is moving and what these price shifts are really telling us. In this video, we're going to break down what just happened in gold, why silver is reacting even more violently, and what these moves mean beneath the surface. We'll talk about fear, momentum, the US dollar, and why silver often lags before it suddenly explodes higher. This is not the kind of discussion you listen to halfway or while multitasking. It deserves your full attention because when markets move like this, details matter, timing matters, and understanding the reason behind the move matters most. So wherever you are right now, take a breath and slow down. Sit back, relax your shoulders, and clear your head. What's happening in gold and silver right now could shape the months ahead. By the end of this video, you'll understand why these metals are back in the spotlight and why volatility is far from over. Ignoring gold and silver at this moment could be a costly mistake. Stay with me, listen carefully, and let's break this down properly. Ladies and gentlemen, something massive just unfolded in the gold market, and it's demanding attention. After weeks of violent price swings and uncertainty, gold has surged sharply in U.S. markets, delivering one of its strongest rallies since 2008. This is not a routine move. It's the kind of price action that changes market psychology overnight. Spot gold jumped more than 2% today, immediately following an explosive near 6% gain in the previous trading session. Moves of this magnitude are rare and usually signal a deeper shift beneath the surface. Even more surprising, gold briefly traded above the $5,000 per ounce level. Just days ago, gold was under heavy pressure as selling intensified across futures and ETF markets. Stop losses were triggered, leverage was flushed out, and sentiment turned extremely bearish. That kind of fear often sets the stage for powerful reversals. Then buyers stepped in aggressively, and the market snapped higher. A nearly 6% single-day gain marked one of gold's strongest performances since the 2008 financial crisis. Today's follow-through confirms this was not just a one-day event. One major force behind this rally is bargain hunting by institutional investors. Large funds and long-term players viewed the recent sell-off as an opportunity rather than a warning. Historically, some of the strongest gold rallies begin when pessimism is at its peak. Another key driver is the weakening US dollar. As the dollar loses momentum, gold becomes more attractive to international buyers. This currency effect often accelerates demand and pushes prices higher in a short period of time. Safe haven demand is also quietly returning to the market. Despite periods of optimism in risk assets, uncertainty around policy, debt, and liquidity remains unresolved. When confidence cracks, gold tends to absorb that fear quickly. Silver is rising alongside gold, but its move has been more controlled so far. Historically, gold leads first while silver lags before catching up aggressively. This behavior often signals accumulation rather than speculative excess. Silver's dual role as both a safe haven and an industrial metal makes its next move especially important. Once silver starts outperforming gold, rallies tend to broaden and accelerate. For many traders, silver is the confirmation signal. A critical question now is whether this rally is real or just a temporary trap. Sharp rebounds after steep sell-offs often come with pullbacks and renewed volatility. However, this move appears to be supported by real demand rather than short-term speculation. Sustained buying and strong follow-through suggest a potential structural shift in the market. If gold can hold above key psychological levels, momentum traders are likely to step in. Failure to do so could still lead to another shakeout. Looking ahead, the direction of the US dollar will be crucial. Continued dollar weakness would provide strong tailwinds for both gold and silver. Any change in rate expectations could also dramatically influence price action. Physical demand will be another key factor to watch. Strong buying from Asia and central banks often establishes a long-term price floor. These flows tend to matter more than short-term trading noise. Silver's behavior in the coming sessions may reveal the true strength of this rally. If silver begins to outperform, it would suggest broader participation across the metals complex. That scenario often marks the early stages of sustained upside. The gold market has now entered a high volatility, headline-driven phase. Large price swings are likely to continue as investors reposition. This environment rewards preparation, not complacency. The biggest moves in gold rarely feel comfortable when they begin. They emerge during periods of fear, confusion, and sharp volatility. What we are witnessing now fits that historical pattern closely. Gold has just posted one of its strongest rebounds in more than a decade, and silver is beginning to stir. Whether this becomes the start of a new leg higher or another test of conviction, the message is clear. Ignoring gold and silver at this moment could be a costly mistake. Something significant is unfolding in the silver market, and it's happening fast. After a brutal crash that shook confidence across futures and physical markets, silver is staging a powerful comeback. This kind of price action rarely happens quietly. Just days ago, silver was in free fall after reaching extreme highs. Prices collapsed roughly 40 and 46% from recent peaks, driven by profit-taking, forced liquidations, and heavy leverage being wiped out. Sentiment flipped from euphoria to fear almost overnight. That fear, however, created opportunity. As selling pressure exhausted itself, buyers began stepping in aggressively. Historically, silver tends to rebound hardest right after panic reaches its peak. From the recent crash lows, silver has already surged around 20%, signaling a sharp shift in momentum. During the initial rebound phase alone, prices jumped approximately 11 to 15% in a very short span. These are not small moves. They reflect serious capital returning to the market. Silver's rebound highlights its high beta nature compared to gold. When markets sell off, silver usually falls harder, but when confidence returns, it tends to recover faster and with greater force. This volatility is exactly why silver often outperforms in recovery phases. Another key driver behind silver's strength is its dual identity. Silver is both a precious metal and a critical industrial input, tied to electronics, solar energy, and advanced manufacturing. That combination gives silver multiple demand engines during periods of economic transition. As gold stabilizes after its own powerful rebound, silver is beginning to attract attention as the catch-up trade. Historically, gold moves first and silver follows with explosive percentage gains. This pattern has repeated across multiple market cycles. Importantly, silver's current rebound does not yet show signs of speculative excess. Price action suggests accumulation rather than euphoric chasing. This phase often acts as the foundation for larger moves ahead. A key question now is whether this rally can sustain itself or if another shakeout lies ahead. Sharp rebounds after crashes often come with volatility and pullbacks. However, the presence of real buying rather than pure short covering strengthens the case for continuation. If silver can hold above recent recovery levels, momentum traders are likely to step in with greater conviction. A decisive break above psychological resistance zones would signal that the rebound is evolving into a broader trend. Failure to hold could mean consolidation rather than collapse. The direction of this US dollar will remain a major influence on silver prices. Continued dollar weakness tends to amplify upside moves in metals. Interest rate expectations and liquidity conditions will also shape near-term price behavior. Physical demand will be another critical factor to monitor. Strong buying from industrial users and long-term holders can help establish a durable price floor. These flows often matter more than short-term volatility. Silver is now firmly back in the spotlight. After crashing nearly half its value from the highs, the metal has already reclaimed about 20% from the lows. That kind of rebound signals that sentiment is shifting fast. The biggest silver moves never begin when conditions feel safe. They start when fear is high, volatility is extreme, and conviction is tested. What we are witnessing now fits that historical pattern closely. Whether this turns into a sustained rally or another test of patience, silver has entered a decisive phase. Ignoring silver at this moment could mean missing one of the most aggressive recovery moves in the metals market. As we come to the end, let's bring this back to where we started. The kind of violent moves we're seeing in gold and silver don't show up in quiet, comfortable markets. They appear when fear is high, confidence is low, and money is quietly changing hands. Gold's powerful rebound and silver's aggressive surge after a deep crash are not random events. These moves signal that investors are repositioning, not panicking, and that the market is entering a decisive phase. Historically, this is where trends are born, not where they end. Remember the moment you paused, sat back, and focused at the start of this video? That mindset matters, because understanding these shifts requires attention, not emotion. The details you heard today are the same signals professional money watches closely. Volatility is not finished, and uncertainty is still part of the story. But uncertainty is also where opportunity forms for those who stay calm and informed. Gold and silver are once again sending messages that shouldn't be ignored. So before you jump back into your work or scroll onto the next video, take one more moment. Let what you've heard sink in, because these markets are setting up for moves that can shape the months ahead. Stay alert, stay patient, and keep watching gold and silver carefully. If this discussion helped you see the bigger picture, make sure you stay connected, because the next developments could matter even more than the last.